wish I could see you, but since I can't, I will just imagine that we have a fairly large group there, and I understand that there are traffic problems getting there, or we would have had more. But what we're going to do tonight, Ian and I, we're going to, the focus is going to be on prospecting, but to really do that, we have to show you most aspects of the software. But everything will be related to prospecting, and as Norm said, I heard him say this, that you'll see about 10% of what's in the program, and that's probably true, if that much. But I want to show you the flexibility of the program and how we use it for tops down and bottoms up prospecting. And Ian's showing up, I'm showing up as Deborah Moses, who is George Roberts' wife, and Ian is showing up as Ron Brown. So if you see those names, don't be confused. But let's go ahead and get started. What I have up here is the opening menu from HGS Investor, and I just made a new directory and called it HGS Clean Install because I wanted to start with a fresh version for this presentation tonight. Now there are actually 7 icons on here. We're working with the 4 modules on the left. These are the key parts of the program. This is for updating the data. This is where you set your preferences, things that we're not even going to discuss tonight. What I'm going to start with is the ranking module. And I'll click on that, and it defaults to the HGS, or the industry monitors, industry groups. And this module gives us a look at group rotation of industry groups, stocks, ETFs, anything that is in the current folder over in this window. Right now I'm using the default setting of Ian Slow. This is a formula that Ian and George worked out many, many years ago. And this is for long-term, or longer-term, I should say, group rotation. And the way you can use this is to see where strength comes into these groups, and it remains there for longer periods of time. Now the formula for this is it's a 6-month formula with 70% of the emphasis on the last 3 months. And I'll be looking at some charts here in a little while, but this is a very good way to visualize rotation in and out based upon the longer term time frame. Now we're going to go to some shorter term relative strength modes also, and that's a huge advantage that HGS Investor has, because we can get away from the group lag, which is so prevalent in a lot of other relative strength measurements. Like if you look at IBD, those are based upon a longer term like Ian Slow is, but if we want to see what's happening in the shorter term, we can just change the settings by clicking in this area right here. Now I'm going to bring up, I'm just going to arbitrarily bring up a group here that has been green for a long time, just to show you what this looks like. Here's retail mail order, and this is a chart that I like to use because it has the force indexes in here. These are elder indicators, and they're based upon both price and volume. And I'll just give you the formula right now very quickly. It's today's close minus yesterday's close times today's volume. And when the shorter term is positive, or the longer term, the shorter term is the 2-day, which is represented by this bar. It's green, and the same goes for the 13-day. So you have a very short term and then a more intermediate term. But getting back to the ranking of this, notice how this group has been strong for a very, very long time. And it got a little choppy in here, but it held up pretty well, and now it's breaking out again. If we look back at the ranking module, and I can just click directly through to that ranking module. Let's go back in time and see how long this retail home, which retail mail order, was that it, Ian?
That's right, yes.
Okay, I got a little confused there. It was red going, let's see, I'll put it one line below. It was red back in November, and then it turned yellow. You could see that it was starting to rotate in, and then it turned green clear back on December 3rd. And let's take a look and see what December 3rd, here is December 3rd right here. So it was just starting to emerge, and this group was coming from red to yellow to green. So it was just starting to emerge and join the stronger groups in the list. And you can see what happened from there. It had a really nice move up, and then it consolidated, and now it's going again. Let's just take a look at some of these numbers here. It did turn, let's see, I think it dipped to yellow for 1 week, and then it went to green again. So this is the comparative relative strength over the long term. Now, before I leave Ian slow, I want to point out that these numbers are calculated throughout the week. So right now, Internet services, this is Monday and Tuesday's data. And then on every Friday, these numbers are locked in. So you can go back to any point in time, and I'll just arbitrarily pick a date, March 25th, and click on that, and I can see by sorting on this column where the strength was on 325. The top group was energy, oil, and gas drilling. So you can do that on any of these columns. So that's a way you can go back in time and check rotation. It's a very nice feature to have if you want to look back historically. Now, I'm going to move to a shorter term.
Ron, before you do that, may
sure.
I come in?
Sure. Yeah, please
one of
do.
the things you find is that this, of course, is an excellent tool for looking for rotation. And if you look down on item number 4, you see that health biogenetics has changed from red to yellow to green in the last 5 or 6 weeks. Likewise, if you get your BDIs down to the area of around about, where was it now? Oh. Dear, oh dear.
What were you looking for?
I was looking for other health pieces. There it is.
Right here.
Around
There's
the
several
25,
of them
26,
right here.
27, 28, you see that they're stirring as well. As you well know, there are 4 times in the year when investors need to sit up and take notice in terms of rotation, and that invariably happens around earnings due time. And as you can see, something is happening where people are now moving into the health area. Just wanted to mention that, but that's on a long-term basis. Now, Ron is going to show you what we can also do, which is to get over the lag factor of the longer term. And he'll show you that right now.
Okay, thanks, Ian. Yeah, just interrupt me anytime because
Thank you.
I'm sure I'm going to miss things.
Yeah,
anyway, let's just take a look at this one right here. I don't know what this chart looks like, but back on April 8th, it was red, and then it turned to yellow, and now it's green. So on April 8th, it was back here. This looks like a very nice chart. It's moving up, but what it tells us is back on that date, on April 8th, there were several other groups that were stronger than this. So this shows that just because a group has higher relative strength or lower relative strength than other groups at a certain point in time does not mean that it's necessarily going down. It just means that other groups are stronger. Now let's move to a shorter time frame here. You can see that there are 5 options here. Ian Fast we really don't use anymore, but Wilder relative strength is in here. You can put the number of weeks in that you prefer, the percent change. You can change the number of weeks. I use 3 for that a lot. And then comparative relative strength. compares or lets you compare whatever's in this folder with any other security or index. And you can see the default is the SPX. So if we want to change to something else like the QQQ, I can do that just by clicking on Find, and I would be comparing to the QQQ. So if you trade a lot of NASDAQ 100 stocks, then you might want to compare to the QQQ to see which ones are outperforming the index. Now I'm going to go back to the SPX and find that and just use this, and I'm going to select this, and we'll just compare these same industry groups to the SPX over the past 2 weeks. And this changes everything dramatically, as you can see, and this is what I was referring to as the group speed. Now you can see that retail food index is up here on the top, and there's if you're using this comparison, you may want to use what we call raw relative strength. And what this does is it compares the percentage move of these groups, whatever you're looking at in the ranking module, to the S&P 500. And if you look at this number right here, it's 107.17. The base number for the SPX is 100. So anything over 100 is outperforming the SPX over a 2-week time period. So the food index is outperforming by 7.17%, the computer manufacturing index by 6.98%, and so on. So it's a way to get a quick read on what is happening. Now, did I forget anything there, Ian?
No, I think that's fine. I think
Okay.
one thing you might want to point out is the steel specialty index.
Okay.
In that's beginning to show movement.
Right. Now, this is beginning to show movement. In fact, let's go back and compare this. It's number 3 using the 2-week comparison to the SPX, but let's just go back to Ian Slow and see where it was. And you can see that it was down at number 20 on the longer term, and then when we go back up to the comparative relative strength, it moves all the way up to 3. So you can see that it's going to come, any group is going to come to the top of the list faster by shortening the time frame.
You might double click on that one to show the chart. There you go. See that? It's moving.
You can see the very sharp movement of this group, and that's over the past couple of weeks. Well, it's actually the past week and a half, because remember that this is a building for this week, so it's taking into account the prior week where it was outperformed by 5.88%, and now it's outperforming by another 5. Well, no, I'm sorry, that's over 2 weeks, the 5.12, but you can clearly see it on the chart. So we have multiple ways of looking at these stocks going top down with different measuring methods. I'm going to go back to Ian Slow relative strength, and I'll just go to the relative strength. And this is another really nice feature in the way I like to look at the market. We can go up here to the Tools menu, and we can drop down and select Tile Ranking and Warehouse horizontally. Now what that did is it kept the ranking module on the top, but it brought up the next module, which is called the Warehouse module. Now this is the primary module for prospecting. So in this instance, I'm prospecting for long-term and short-term, and ideally what you want to find is a group that's moving in the short term, which is also showing long-term strength. I said ideally because in a bull market that seems to work very, very well. So let's just go down here, and I want to explain a little bit about the Warehouse module. What it is a module where you can put your own fields in. All of these fields are in HGSI, and you can customize the look that you want to have. And this is a view that I built quite some time ago. I use it for all my top-down analysis. And of course I'm looking for red or green down here also, just for a quick visual on what's happening. Now you can see at the top of the list, semiconductor equipment index is up here. That is driven there by what we call the combo rank. And that combo rank is unique to HGSI, and what it is, it allows us to take any of the fields which are in the software, and we can weight these fields according to how we want this view to react. And notice up here at the top that I've weighted the percentage price change one day at 25%. So that has a quarter of the weighting. I then weighted the force index 2-day and 13-day, the AD direction or accumulation distribution direction, which is a very short-term indicator, a one-day indicator, and then accumulation distribution, which is a longer-term indicator. All those got 16.7%. All of these numbers are calculated for you once you put a weighting in. I weighted this at 1.5 and these at 1, and then the 5-day at only 0.50. So I wanted some weighting in here for the 5-day, but I wanted a much lesser emphasis on that. So by applying that, you can see that the semiconductors shot up to the top here, 2.5% gain today, and it isn't the highest gainer in the day. To see that, you can click on the percentage price change one day. But remember, I'm taking all these other factors into account. The AD direction, which is over here, the accumulation, and the force indexes, which are both green. So all those factor in. So I generally look at it this way, and then I will also look at the percentage price change, one-day change, to get a feel for what really moved here just based on price alone. So you can do it either way. Now, I'm clicking on the semiconductor index, and notice when I click on the ranking module here, this transfers up to the ranking module, and the semiconductor index is down at number 33 out of 154. So it was very strong. We know the semis were strong for a long time. At the October seminar that Ian and I put on, after that date, the semiconductors are strong for a long time. And then you can see they kind of got into trouble here, and now they're re-emerging on the long term. But rather than waiting for the long term to show up here in the ranking module, we get a very quick visual down here as to what's happening in the short term. So you get your short-term group rotation down here and your longer term up here. Couple more things while I'm here. Notice these two columns. This is the days since the force index 2-day crossover and the days since the 13 crossover. Now this index, even though it's at the top of the list today, both of those force indexes fired 5 days ago. 0 is a crossover day. If you look down the list here, you'll see a lot of zeros. That's a crossover day, which means it happened today. So this is not a new signal. These signals happened, well, you can see it right up here on the chart where they both turned green. And I'll put a crosshair on here, and you can see that these both turned green just as this was coming out of a base. So it actually turned green the prior day with a red candle, and then it took off, and money is moving back into the semiconductors. Here is where the strength was on the long term, and then it got choppy, and we could see that reflected in the long term right in here. You can see where it got choppy, and now it's starting to go again. So this is a nice way to prospect for both comparing long term to short term. And then if you want to see what's in these groups, you just right mouse click and you go down to the group level, and this is being these stocks are being driven by the combo rank also. And you can see that UTEC comes to the top of the list, and FSII, and then here's the index. But if I do a percentage price change one day, I get a little different view here. So there's a lot of strength in this group, and you can find them by either using the raw combo or by sorting on a percentage price change. Plus, there are many other ways to look at these groups. In fact, I'm going to quickly jump to another view. And I'm clicking on this finger here, the pointing finger. That is a quick pick. And notice that for the group tonight, I have created a folder and I put some views in here that I wanted to emphasize. And that's another very nice thing about HGSI. You can customize it to your needs. Not everybody wants to look at the same thing, obviously. And we have the ability just to go down in all of these strategies that are on here, and you can just drag up whatever you want. But let me get back to the top here, and let's just look at a few things here. I'm going to talk about these smart groups when I go into the designer module, but let's say you're interested in growth stocks only down here in these semiconductors. So I click down to the semis, and now I'm clicking on the SG style growth, and that changes the number of securities from, well, let me take the filter off and see. We had 48, and by applying this view, we limit our number of candidates to 21. And if you look over here at these columns, you can see that there is tremendous earnings growth in all of these stocks. And this earnings growth I will also show you in charts in a little bit later. But if you're interested only in stocks that are growing very quickly, that's a good way to do it. Or you can go to any other group. If you want to look at leaders only, and I just pulled these up here for an example, you can look at the leading stocks based upon the criteria of the filter and the combo. So this would give me a very quick look at the leaders. Now, if I want strong earnings per share with a high relative strength, trading near a 52-week high, if you're a momentum trader, this cuts it down to 5 stocks, just like that. So you have a lot of flexibility, even though you're going top down. You can bring up any other view you want to, and I'll be looking at some of these others in a little while.
Notice, by the way, if I might come in here,
yes.
On this particular view, you can see that the EPS rank for these are all above 85. That's very strong. As you well know, all this ranking is done between 0 and 1 and 99. 95 means it's 95% better than all the others in the database. Likewise, we have the RS rank, which is the relative strength of the stock relative to others in the database. And then we have the group rank, and the three combined together gives you the so-called ERG, E-R-G. If you add them together, look how strong these are. Maximum would be 99 times 3, which is 297, and these are all sitting up there looking very pretty. Notice, by the way, if I may carry on for a second, if you move over to the AD column, you can see that these all have accumulation distribution of B or better. That's what you want to look for.
Okay, so thanks, Ian. Ian eventually explained the scorecard. That is something we were going to talk about. Well, we'll talk about it still, but he's talking about ERG. This is something he came up with many years ago. It's just a quick way to rate stocks based upon the earnings per share rank, the relative strength rank, and the group rank. And while we're here, I want to point something out. I mentioned that, I think I mentioned that E and slow is very close to the group rank. If I didn't mention it, I'm mentioning it now. Notice the group rank here is 78. This is calculated a little bit differently than E and slow, but if you look up here, you can see that it's 79 right here in the ranking module. So they're very, very close, generally speaking. Not always, but for the most part, I found that to be very, very close. Okay, so let's move on. I'm going to go back, but I don't want that view. I want to go back to my T1 view, which gives us the look at the top down. So what do we see for today? Well, we see that semiconductors are on the move, steel specialty, communication fiber optics, retail apparel. Now, if I want, like I pointed out earlier, if I want to see the percentage price change one day, I can do it that way. And retail jewelry was the biggest mover today, probably because it's concentrated to a stock or two. It's a smaller group. Well, actually, FOSL and ZLC, Fossil and Zale, were outperforming the index, so that's where the real strength was. Now, moving on from here, what I want to do next is I'm going to check my notes over here to make sure I'm not missing anything. And I'm going to go to the designer now because I just talked about those smart groups. So let's move on over to the designer. And I'll just click on this, and this brings up what we call the designer. And it's a lot of things, but it's primarily a data repository where all the information about the stocks, the groups, the ETFs is kept. Now up in this area where you see the icons or the folders with the green, red, and yellow icon, you can't alter these. If you want to alter anything, you come down here to the user groups. And that's something that we'll be working with here shortly. Now notice as I get down here to the smart groups, there is a folder for ETFs, and the ETFs, we have all ETFs, no leverage or inverse, only leveraged or inverse. A lot of people like to just deal with leveraged or inverse ETFs so they could concentrate on all these. When I click on a folder, the information comes up in this window over here. There are categories, there are families. If you like to work with a certain family, let's say the iShares, for example, you can just click on that, and then you can just click back to the warehouse. Everything is interrelated. And then I can put this information in the ranking module just that quickly. So if you want to work with a certain family or a certain type of ETF, you can click through very quickly and see what's happening now.
And Ron, if you may, just double click on that blue one, the first one, and would you believe it, there's the charting module. So in a wink, we have been able to show you how these 4 different modules are all interrelated and all tied together. You can switch from one to the other very quickly.
Right, and it's that's not a, that ETF had no volume, but
okay.
Anyway, no, it's all interrelated, which is very nice. So on this one, and let's go down to one. Let's use the Thailand and just click through here. I can quickly see that it moved up 2% today, and it was green. It's pulled back a little bit on the long-term relative strength, but after the pullback, it's going back up. So you can see that in the percentage price move. So it all works together very smoothly. Now there are other things in here. Here's this is from the Connor's book. These are the the ETFs which he has back tested, and they're in his book, High Probability ETF Trading. And then this is the Morpheus trading group setup. If you're familiar with that, he has a nice arrangement of ETFs also. In addition to that, we have some classic views. We have strategies which are being put into HGSI. Well, I shouldn't say put in. These are in, but new ones are being added. You can see the Morales and Catcher. This is the pocket pivot. This was added a few months ago, but Charlie Kirkpatrick's work is in here. He is a relative strength, fundamental type person. You can see that he has bargain stocks, growth and value, and then here are the Larry Connors ETFs. There aren't a lot of signals here, but they do appear. I'm not getting any signals now. Oh, I've got a filter on. No wonder. I'm still not getting any signals. There must not be any signals today, but that's not unusual. And then the Woodward and Brown, we've been around the longest, so we get the most space. We've been putting these smart groups in here for 10 years now, and they cover a lot of different filters and combos. So all of these smart groups which are placed in here are built using a filter and a combo ranking. And for example, if I click on the 52-week high today, these are stocks that hit 52-week highs today, and these were filtered out, and then the top 25 stocks based upon the combo rank are added to this list over here. Now you do have the ability in HGSI to apply these smart groups to the entire list if you don't want to limit yourself to 25 stocks, and that's all in there for you. But you can see that we have a lot of different things here. Now I'm going to come back here in a minute, and we're going to do something that's called the group inclusion report. But before I do that, I want to go down here and show you some user groups that I've put in, and notice that I put A's in front of all these. That's because I wanted these sequential as I do a daily report. I do a daily report for myself and other people that subscribe to what I call an online DVD, and I use the W&B user groups for that. And I'm just going to do that very quickly, and then we'll come back to this and I'll show you the group inclusion report. You think that would be a good way to go, Ian, or should I?
Yes, by all means. I think the thing to mention is this, in terms of this designer area, the top two pieces that Ron has shown you are like the library. And what you can do is pluck stuff from there or generate your own and stick it in the user groups. User groups is where you generate all your own stuff.
Right, and we'll be making some user groups here before long.
Right.
By the way, you can drag and drop anything down here. And by the way, I'm going to be using this group, so I'm going to drag it down. I'm going to be using it later. I'm just going to go ahead. Notice how it's generating the indexes for me as they were dropped down here, and they're over here in this area. And it looks like we have 10 groups, and that's going to be used later. We're going to show you a percentage change chart. So I just dropped that down there while I was thinking about it. Anyway, let's go here, and I'll click through to the warehouse. And I'm not going to use the ranking module for this. I'm going to click on raw combo. Actually, I'm going to use percentage price change 1 day for this. And you can see immediately what happened today using what I call the Major Markets Plus folder. These are major market indexes, plus I added a bunch of ETFs in here. And the reason I did this is just to get a feel for the broader market and some ETFs, some other areas, including commodities, so I can look in one place and get a feel for what happened today. Immediately I can see that the VIX dropped 7.3% today. Actually, the dollar hasn't been updated. That's yesterday. I updated this early and not all the data is in it. And the reason I can tell that is if you look at this last date right here, this is how I can tell if everything's current or not. So the dollar was not up today. I didn't think it was. So disregard that. But everything else is current, and we can tell that the small caps are strong today. This SML represents the S&P 600, part of the S&P 1500, which we use quite a bit. That was up 1.8%. The Russell 2000 was up at 1.6%. So immediately I can see that money was flowing back into small caps. In other words, traders are comfortable with risk. You see it all the time. When the market goes down, where does the money flow out of first? Small caps. When it's going up, it flows right back into small caps. So the market is getting more bullish based upon that. I can also see, looking over here, that using the force indexes again, I just scrunch these up because they take up too much screen real estate if I don't, and I know what they are. This is the days up, the 2-day force index. This is the 13 up, this is a 2-day down, and this is the 13 down. So you can see that looking at the NASDAQ, which is our primary index, that the NASDAQ crossed to the positive side 3 days ago. Remember, 0 is the crossover day, and it's following through. And also momentum is building, and that's pretty evident by looking at the small caps. I'll just bring this up quickly, and you can see where this signal was to go long on the 2-day and then confirm by the 13 right there, and now the NASDAQ is going up to challenge the recent highs. So I look at this quickly. I don't spend this much time looking at it when I'm not talking to myself, but I just quickly flip down through here. I can see that natural gas rallied today up 2.2%, and notice here all of the small cap ETFs, or a couple of them near the top. Here's a couple more right here. So very strong movement in the small cap. And then here's the IPATH VIX short-term futures. That number drops. So I can get a real feel quickly for what happened here. Notice that most of these force indexes are positive on all of these ETFs. As I go down here, I am now in what we call the broad market indices. These are indexes which are generated by HGS Investor, and they're equal dollar weighted indexes. In other words, you would put an equal amount of dollars if you were to put an equal amount of dollars into each of these securities. That's what the indexes would look like. They're not market cap weighted or price weighted. And if you look here again, it's telling the same story. The small cap 600 index was up, the Russell 2000 was up, the institutional 50% small cap, that's an index that I created. These small caps have to have at least 50% institutional ownership to be included in this list. So the market is getting more bullish. It's just more confirmation. And then notice the VXN, the NASDAQ Volatility Index, and the VIX both have fallen off another 7% today. So fear is evidently going out of this market, or complacency is coming in, one of the two. Now this is a more focused view, and these are once again indexes that we put together, and they just contain stocks that we may want to look at. For those of you who are a little more defensive minded, you could pay attention to this group, and you can see that this has been strong on the 13 force for 33 days. 32 plus is 0. It pulled back, and now it's going again. And if I want to see what stocks are in there, I just right mouse click, go down to that level, and if I wanted to see the ranking strength, which I'm not going to do right now, I could just click through to the rankings. So you can quickly see what's going on. Utilities were up today, followed by the NASDAQ 100. So strength coming into that also. I don't have any small caps in here. I don't need it because we've got so many other examples of small caps. Here's that sectors by stock. Notice that most of the sectors are green on the force indexes. They're positive over here. The AD direction is up. Accumulation is kind of mixed, but not too bad. I mean, they're coming up. There's a lot of stocks in these sectors. So we're going to go down to the next level, which would be the group level, and get a feel for what's going on. But you can see the strength was in telecommunications today and consumer services. Well, there were several sectors that were actually pretty strong. Now I'm going to go down to the industry groups. There's that retail jewelry group that we saw before. communication fiber optics. Here's that steel specialty. We can see how strong it is. Just by scrolling down here, I look for a lot of green, and I can see the green here, but we're going to show you a way here where you can see the accumulation or the force indexes much easier. But the market, it's starting to look, well, it has for the past few days, pretty bullish. Now I'm going to go up here to what we call the spectrum analysis or spectrum analyzer. I'll click on that, and it brings up a window. Now this is something that we've had for a while, but it was really very basic, and just a couple of weeks ago George and Matt, the programmer, put the ability to slice this information in here. Now I want to go to, I'll just click on load custom slices, and you can pick out any of these slices. We've added a few which were not shipped with the program because we're experimenting now, just trying to figure out exactly what all we can do with these. But I'm going to go to the accumulation distribution. So rather than looking back here for AD, yes, you can go up and down the column, but that's a hard way to look at the information. Now we have the ability just to look at these slices and tell us exactly what's going on with accumulation. When I click on this area over here, it selects the pie, or that piece of the pie, and shows me that there are 6 groups with A accumulation. And also, if you look down here, you can see what those 6 groups are. And if you click on that, it'll take you directly to the chart. So once again, everything is integrated. Everything works together. But what I want to point out here is notice how large B accumulation is now. And I track these every day. I take a snapshot from Snagit and put it in a OneNote for my report so we can see the movement in and out of the market. And over the past few days, it's been readily apparent that accumulation is coming into the market. So that's one thing we like to look at. And then another thing is a percentage price change one-day slices. So these slices show us how much these groups moved. 6 groups moved between 2.5 and 5%. Now, if anything moved over 5%, there would be another slice for it. We have slices going up to 10, I believe. Greater than 10. No, greater than 10. See, we have all these slices available, but these are the groups that met certain criteria, and these are the only slices that are included. So 2 to 5%, 6 of them, 142 of them moved between 0 and 2.5%. So obviously it was a pretty strong day based upon group movement. And then if you want to see what these indexes, what the actual percentage move is, you can go to the warehouse. But this is a very nice feature, and I'm going to come back to this in a little while when we look at some stocks, and I'm going to show you how you can slice this information into a user group, and that will be coming up very shortly, and then you can do some prospecting from there also. Ian, did I miss anything there?
No, but by the way, I can tell they're frothing at the mouth, and they say, hey, show me how we can get to some stocks. So okay, I'm giving you a lead in here, which is in fact to show them that group report.
Oh, okay.
Yeah.
So let's go back to the designer.
Right.
And we're going to go under the tools menu. We have the ability to do a couple of reports. I'm not going to touch on the group analysis report tonight because that is for tracking from in the past. What I want to talk about and show you is a group inclusion report. Now that brings up a window, and I'm going to clear this, and we're going back to the smart groups under HGSI strategies, and we're going to use the pocket pivots from Morales and Ketcher, and then we're going to select all of the Woodward and Brown long side smart groups. And what that does is it's going to create an HTML page, and I'll come back and make a group here in a minute. I just wanted to show you how this works. But what it does is it goes in there instantly and shows us stocks and the ones which meet certain criteria. Now, you can see that UTEK passed went through 8 smart groups, and all of these appear right here. Now, I'm looking to see if there are any pocket pivots. You see any, Ian?
No,
yeah, there are some. But here's a great way to find that. If you hit your Control F key, and I'm using, this is the Chrome, I believe. I'll just type pocket in here. And notice how it highlights. I bet you didn't know that, did you, Ian?
No, I didn't. By heavens, I
See,
learned something.
it highlights all the pocket pivot stocks for you. So let's just say that you're interested in stocks that are showing pocket pivots along with others, the other groups, and that's a quick way to find them. If you want to find anything else, like let's do best criteria. Well, here's best of Woodward and Brown. Every time best shows up, you can see where it appears right there. Now let me go back and do something else. I'm only interested in taking the top 10 stocks, or let's make it 20. So rather than, we used to have to go through a long process or put them in manually. Now all we have to do is select this down here, make group from report, and I'll just call this GIR to make it easy. I didn't want to do that. I mistyped that. Sorry about that. Let me do it again. Okay. I can't type and talk at the same time. And I want 20. I want the top 20. And we'll just overwrite that other one. And what we get here is we get the same list. It'll go all the way down, but I'm only interested in those top 20. So if I go up here, that's the one I mistype. I'll just delete that one. And we'll look at the GIR, and here we are. We have the top 20 stocks based upon the number of times they were picked by the smart groups. And then we can click through to the warehouse, and let's just go to another view I call a scorecard view, a demand view, and we can instantly get a feel for the scorecard characteristics of these stocks. And notice that most of them have high relative strength, but a couple of them don't, including Apple. Apple isn't a high relative strength stock in the database now because it's been doing this for months now.
Mm-hmm.
But most of them are showing up, but Apple did show up in the top 20 again. So
now, would you be a good soul and take the filter off so that we can see the index?
oh, yeah,
I want to drive this point home there. You see,
Yeah,
now you've got the index, and it's number 16. The beauty of one of the really big strengths of this product, for example, is that you can have an index of anything. And there's number 15, and if we double-click on that, that's what this group is doing. It's done in the last 2 weeks. You're on the top winners. And I'm sure you're going to say, but Ian, they're gone already. Why can't you show it back here? Of course. These are all the same techniques we use, and these have been proven over time. It's a question of what your stomach wants to look for. But if you want big gains,
excuse me, and what we found is that if you track a good group of stocks like this, there are going to be pullbacks, and these stocks have a tendency to go again and again. No, you don't want to buy them when they're really extended. But if you track these lists of stocks, a group inclusion report, and put it in a user group, just like leave it in this user group, and then you can apply other views to it as you go along. Like I'm not going to show it tonight, but there's an elder pullback view. And that will find stocks that are strong, but they're pulling back in the short term. That's when you become interested in them. I didn't mean to interrupt you.
No, that's great.
Okay.
So there you are. That's whetted your appetite, I'm sure. Shown you how, in fact, you can very quickly arrive at the types of stocks that are moving. You can do it several ways.
Okay, now let's do something else here. I'm going to go from GIR to all securities, and I'm going to hold my alternate and spacebar key, and notice that it defaulted right up here to all securities. And the
Notice,
reason
by the way, that this warehouse has 7,415 securities. And of course you say, I can't work with that. I want to get it down to 3 stocks to buy on Monday. And this is how we do it.
Okay, so I don't have a filter on, that's why so many are showing, but I'm going to apply the filter by double-clicking on this icon here. That cuts it down to 2141, and those stocks are $5 and above, trading at least 250,000 shares. And this line here makes sure that they're all assigned to a group. As new stocks come out sometime, it does take time to get them into the groups. I want to make sure that all these are in groups so we have a complete ERG ranking. Now what's driving this? You notice that filter wasn't anything special at all. What is driving this is the combo rank. And it's a long combo rank. You can see that it's weighted with various weightings, but the primary emphasis is on the Force Index 2-day, and then a white body. I'm looking for a white candle. Force Index 13 is right up there, and then I want the industries moving too, so that's why I wanted all of these to be assigned to a group. We want group movement too, relative strength, ERG, and so on. You can see the lesser weighting is down here. We do have some fundamentals in here, not much, but ROE, return on equity, and 1-year earnings growth. So this gives us a nice look group of stocks. I believe this one is a buyout, so we can forget about that one. It just is still in the database right now. But here's FOSL again, and you can see that it gapped up. And notice that the signal based upon the Force Index, the 2-day started hitting here, and then the 13 hit yesterday, and then it gapped up today. But you can see that a lot of very good stocks, well, this one isn't as good, but it's moving based upon the combo. Right here it's moving. It's not as nice a chart. But it drives these stocks to the top of the list, and you see an awful lot of green. Now this is where I want to go back to that spectrum analyzer. And let's say, well, geez, this is great, but I want to find stocks that are showing some demand today. I don't want to look through all these stocks, so let's go back to this, and I'm going to load the days since the Force 2-day crossover, and these are the stocks out of the 2141 which crossed over today. This is the total. 1,230 of them have passed the 2-day force. Not all 2141 have. You can see that number up here. But today, 420 of them crossed. That's a lot of stocks. But let's make a group from these, and then we'll concentrate on these. So to do that, I'll just click on Make Group from Slices, and I'll just call this Stock Slices. I normally date these groups so I know what I'm looking at, and I'll click on OK, and what it's doing, it's putting these into their respective groups. So rather than going through all of these that crossed today, I have put them into a group, or the program has, and it's Stock Slices. Here's 1 to 5 days, 11 to 20, 6 to 10, and today. So these are the ones that crossed over today. Now notice I'm going to go back to the warehouse just by clicking on this, and this column right here, the days since the Force 2-day crossover, it's all zeros. So these are all crossing to the upside today. Now a lot of these, go ahead.
Notice that what Ron has done in a matter of 5 minutes or less, taken you from 7,000 stocks through 2140 down to 420. And now he's going to, in fact, cut it, pare it down even further. And as you well know, from what he's shown you, we put a lot of emphasis on the force index. And the reason for that is that this is one of the indicators that has both price and volume. So the 2-day and the 13-day, both green, says that's manna from heaven. They're the ones that's moving now. Let's get on those.
Okay, so these have crossed over. I'm still using the same view and combo. Notice the combo ranking. I didn't point this out. The higher numbers are at the top of the list because these are the stocks which best fit the requirements of the combo. So the high numbers are going to be at the top. Now, one thing that we found is that if a stock has had a positive 13-day for quite some time, and then a zero comes up in the today's crossover, these are generally good candidates. Now let me sort. I'm going to do a secondary sort. My primary group here is crossing over today, all the zero crossovers, and I'm just going to click on this and bring these stocks to the top of the list where the 13-day has been positive for a long time. What this tells us immediately is that these have been, based upon the 13-day force, have been above it for a long time. They pulled back, and they're signaling that they're going again. Now this Sonic Corporation had a huge move down, and then it started moving up here. But notice where the 13 went positive, clear back here. I mean, talk about a bottom fish. And then even though it pulled back here, it pulled back on very light volume, not enough to trigger a negative 13, and then it was basing sideways, and then it started moving up. And these red areas here are every time it pulled back below the 2-day force, or the 2-day force went negative where the red went below the zero line, and those are opportunities to potentially get into a stock. Let's see if we can find another stock here. This is GameStop. You can see how long ago that this one fired, and all of these red areas were opportunities to catch it on a pullback. Now it's pulled back here a little bit. It's there's 3 signals here. It looks like it's holding, and it looks like it wants to go in. It stayed above the 22-period moving average and the 50-period moving average. And this squiggly gray line here, this is your group. You can see how volatile this group is. It's kind of all over the place.
Would you click on? Oops, sorry.
Well, no, go ahead.
Would you click on? Oops, I'm staying in the chart.
Oh, GameStop.
Yeah,
oh,
now
yeah,
click
right here
on that beast. Yes, that's the fellow. See that?
Okay.
Look, instantly you have the information relative to revenue, EPS change, and of course EPS rank, strength, group rank, ERG, etc., etc. And inside 5 minutes you can see all the fundamental and technical factors all in one chart.
Yeah, we're big
on the down arrow. If you click on the down arrow over the right, you get some more. There it is. The PE is 9.6, the ROE is 14.52, and anyone who's worth its salt will know that you want ROE better than PE. And there you go, 140 million shares, so it's not a small beast. And if you click once more,
I did.
There's the volume. There's the volume.
Right
it's 5 million shares, so of course, it's a big beast.
Yeah, so you get a lot of information here, and we've been talking a lot of technicals here, but we're really big on technicals and fundamentals combined, and that's where ERG comes in, because when you have a high ERG stock, generally it's a higher quality stock. But right now, I just wanted to show you a few stocks where this Force 13 has been positive for a long time. If you're more interested in the ERG, stocks that are crossing over today. Here's Newport Corporation. It has an ERG of 275. You can see the crossover, and the 13 crossed over 11 days ago. Kind of a loose chart. Once again, it pulled back here, but based upon the 13-day, it pulled back on light enough volume that it didn't trigger this to the downside. Here's your pullback, and now you're interested in buying it when it turns green again. So that's the way, using the spectrum analyzer, you can use the slices you want. If you want the long slices, like or the stocks that have been positive for a long time on the 2-day, you can just look at these stocks, but I'm not going to go into that. Anything else I need to discuss on that? Here, Ian, why don't we do this while we're here?
Oh, that's the fellow.
Okay, so
now we've shown you how to do the stocks. Now let's show you where the strength is in the sectors. And this is a fantastic feature.
And we're going to do it visually. We're going to click through to the charting module, and I'll go to the quick pick here, and I put a percent change chart in here for us, and we'll zoom out a little bit. And what we see here is the, I'll bring up the icon. Oops, sorry, wrong one. I'll click on the icon, and this is going to bring the information up, and then I'll bring my crosshair up, and this tells us how these sectors have performed percentage-wise since 9/1. We started this at 9/1. Now this is a little twist we put in. You can put additional securities in there. You're limited to 10. Let me just show you this quickly. The percent change window, you're limited to 10, but right here, here's where you put the custom date in, the number of securities, maximum of 10, and I didn't smooth this. You can smooth it with a, well, I guess I did a 1-day. Let's put no smoothing in here, and this shows you the actual movements of the sectors. But if you want to like put an index in here for comparison, I added the SPX, which shows us how these sectors have compared to the SPX. The SPX is the fatter green line, and all of these sectors but 2 have outperformed the SPX. And the 2 that have not are utilities and financial. If you look here in this window, everything else is. The technology index is up 50.08% during that time period. And that is a tremendous move since September.
Notice how energy and materials got whacked in this last couple of weeks, but of course they're all going again.
So it's just a nice visual, and you can pick any time period that you want. We just happened to pick September because that was really the beginning of what has been this move for the most part. Of course, we had this, and notice how quickly all these sectors go down together when the market goes down. We all know about risk, but they bounce back very quickly too. It's just a nice way to look at a group of 10 stocks, 10 ETFs, or in this instance 10 sectors. Any other comments?
I just mentioned, come in here, that move down was of the order of about 6.5% between friends. One of the things you may or may not know is that based on the research that I've done over the years, that the S&P will 77% of the time turn back in under -8% from its high. That's a strong yardstick. Anything worse than -8, it can go anywhere. So those of you who are long-term and worrying about your nest egg, keep a BDI on -8% down from the high. They will always turn back 3/4 of the time and go up again.
Okay, good. Well, we wanted to show you that. It's a feature that was added a while back, and it's probably underutilized, but it's something that gives a great visual for you. Now let me go back here and Ian, I'm going to quickly go to the ETFs and then we'll come back to the impulse. I want to show norms.
We're doing fine on time.
Okay, so let's see. I want to go back to just my basic chart that I use all the time. And let's go back to tiling the warehouse and the ranking module. And I want to get out of sectors by stock, but don't forget that you can use it on sectors too, both of these. I want to go to my smart groups, and let's just go to ETFs, and I'll use no leverage or inverse, and we'll click through. Notice how it quickly went from the ranking module down to the warehouse module. I'm going to bring up something that Norm gave us a long time ago. I'm going to use a very short-term version of it. It's called the Alpha 10 trading system. He developed this actually with the Alpha 21. I don't know if he's shown this to you or not as a group. If he hasn't, he should have. And what it does, in this instance, it gives us the ability to look at short-term movement compared to long-term movement. And once again, if you find long-term groups that pull back and are going again, that is generally a good way to do this. Now this is driven strictly by the combo, and the combo is based upon one-day change versus the S&P 500 weighted at 33%, 5-day change versus the S&P 500, and 10-day change. All of these filter down towards, the other two filter down towards the one, so the 1 day is most heavily weighted, and that's what gives it the very short-term emphasis. And if you look at these columns here, you can see, remember that the S&P is based upon 1.00, and you can see that over 1 day the outperformance is 1%, on 5 days it's 2%, and on 10 days it's 3%, and that's the Dow Jones U.S. Telecom. And if I click through here, you can see that it's clear down at number 47 in the long-term ranking. So this is telling us that there is some emerging strength in here. Also in this view, I put the force indexes in once again because I want to see when these fired based upon the force index. So this isn't a brand new signal. By the way, there are all kinds of views in here where you can find these ETFs which are firing today with the zeros, like this one right here. But this U.S. Telecom fired several days ago, but yet it's still relatively weak here in the long-term ranking. It was until this week, and now it's clear up to number 88. So you can see the strength that's come into here. Here's where it started firing signals based upon the force, then the pullbacks, the opportunities to get in, the red lines, and now it's going again, and very strong. So anyway, Norm developed this for use with mutual funds, but it works very, very well with ETFs. And you can just
Ron,
see
if I may come in here?
Sure, please
Would
do.
you be good enough to go up to the ranking module and show me number 1, which I think is silver? Now, I'm sure that some of you have been dabbling in silver. Whoops, where's
here, it's number 3
number
today.
3. Now, if you'll double-click on that beast and look at that, you can see, by heavens, it had a fantastic run, and as you well know, they trashed it in the last week. Now, if you were on this, how could you tell when in fact things were getting terribly extended? Well, you just look at that and you say, hey, I better take care of it, and we can use a high jump tool. There's the high jump. Now, what do you mean by high jump, Ian? It's the distance from the 200-day, the 50-day, and the 17-day moving average to the height of the stock. And as Ron has just very nicely done for me, if you go all the way back to 2008, February of 2008, that was the highest jump recorded back then. Now look at your BDIs on 11.10, and you'll see it beat that. And here we are just a week ago, it got even higher. So you know darn well that it's a question of fear versus greed. And if you're sitting in this beast, it's time you begin to worry when these indices, or these stocks, in fact, get above their previous history in terms of high jump. And there, inside 5 seconds, is an extremely valuable tool for understanding when a stock is extended and it's time you took the money off the table.
Now back here at Tank, that was the top.
There you go.
That was the top, and then here there was a little. It's hard to see.
Top.
Let me zoom in. Well, you can see that it did pull back from that. Pulled back from this one too. Pulled back from this one. You got here and pulled back.
Now
this one it ignored.
Yeah, click on the maximum on that, which is the green one right here to the right, over to the right. Yeah, click on that.
Oh, this one?
There. Yeah, right there. And now let's see what the window says, the second window. Yeah, and there you are. Look at it. The high jump is 78%. You see, it's all there for you. The numbers and the pictures. And at that stage, you say, hey, I better take some money off the table.
Or have a trailing stop. Okay, well, good. So let's go back to this a minute. So here is silver, number 3, and you can see, looking at the long-term strength of this, I mean, this thing was green going back. It went from red on August 20th to green on August 27th, and it never did relinquish that green. I mean, that was just an unbelievable run. And who knows, it may be back. But now, based upon Norm's combo, notice that it's clear down at number 333 on the short term, even though it's bouncing right now. The reason for that is if you look at these numbers over here, yes, on one day it outperformed the S&P by 1%, but 5 days, the 5-day comparison is 0.92 and the 10-day is 0.85, so it's going to be clear down the list. Anyway, I wanted to show you how you can use Norm's combos to prospect for short-term strength or ETFs coming into favor or continuing to be favorable. Now we're going to, Ian's going to talk a little bit about his, let's just go to the major market index. Let's take the filter off, and I'll bring the NASDAQ up. He wants to talk about or show you his impulse indicator, impulse chart.
Yes.
And you want me to zoom out and go back a couple of
to
years?
The 309 time frame. 309.
There it is, right here. Right.
There we are.
There
just give us a little bit more to the left. In other words, I want to see where it came down through the black swan period. There you are. That's beautiful. All right. Now, you say, oh, yeah, how on earth do I make any sense out of this? But this is, in fact, one of the features that is extremely powerful, and I'm going to show you why. As you can see, up on the top side, we have all these bands and greens and reds and yellows, etc., etc. But you don't have to get terribly confused about it. If you look at it in terms of the drop that we've taken in the 2008 time frame, look how red it was, relatively speaking. And if you look down at the bottom, it was yin-yanging up and forth, back and forth in terms of these so-called impulse indicators. For tonight, you don't have to know what they're made up of, but they are, in effect, telling you to heads up in terms of something that has happened that is extraordinary in the sense of the market moving up with momentum or down with momentum. And green and blue are good colors, and they're the up, and red and orange and pink are down. So inside a minute, you've got a flavor for what you're looking for. Now, why do I get you all the way back to 309? Of course, that was the bottom in March of 2009. And look at those green signals down in the second bottom window from the bottom. And look at the blue beasts as well. 5 of them in a row. And what that said to us was, get in. This market has bottomed. Get in as quickly as possible. Look at also the gray area that Ron is showing, and that is in fact emphasizing the 13 EMA force index. And you can see the force change from violently down. Look at it on the left-hand side. I mean, way down and completely to the left. Terrible. And now, of course, improving, and now we've got strength. And look at the top. There they are. They've all changed back to green. And to all intents and purposes, from 309 to 110, it was green. And then we had a little pullback of the order of about 9%, if my memory serves me right, around about 210. But let me take you through this bottom window. I use both Bollinger and Richard Arms as my gurus that I built my impulse indicators on. And those green signals are known as Eureka. I'm not going to bore you with what they contain, but nonetheless, when you see an impulse of those coupled with the Kahunas, which is on the bottom window, and you say, oh, Ian, all this jargon, it's simple. The blue says that there was a one-day change in percent B of 0.24%. What that says is that there's momentum. That's all you got to remember. And you get them coupled together like that, and 5 in a row and 3 blue ones, you're off to the races, and you stay in. And then, of course, you get up to around about the 609 time frame, and now you have a little pullback, and you begin to see some reds, all right? And now look at it again, 715. If you put your jolly old beast on there, you can see 2 greens and 2 blues down below. Get in. Go again if you missed the first run. And we trot over, and let's get over to the next major correction. And you can see several reds that were appearing in the 1109, 1209 time frame. And down she went. And then look at that. There we are. We have a green again going on 310. Now, of course, if we move a little bit to the right, what's in your mind is, hey, Ian, flash crash happened pretty soon after that. And there it is. Look at the flash crash. And look at what happened to the force index 13 DMA. I mean, it's long drop. And look at all the nonsense that's taking place in terms of up, down, up, down, up, down, all the way there for the best part of 3 months. And then what happens? Then we get the greens and the blues appearing again. And around about 9:10, if we come to 9:10, there it is again, 2 greens and a blue, and off we go. And look how it's happened up above. It's changed back from red to green. So those of you who are long-term players, this is what I call the roadmap to hog heaven. You play when the majority of them are green. And of course, many of you will say, hey, I can see that in a different way. But the point is you get a visual in terms of the impulse of what's transpiring. And that's where we have come to recognize that 2 greens and a blue, or 2 greens and 2 blues at the bottom after there's been a correction. After all, we had a 17% correction here during that time frame. You're looking for an entry. And you want some assurance as a longer-term investor. The short-term people take care of it themselves. They know all this stuff on the back of their hands. But it's the longer-term fellows who say, hey, I want a run of at least 4 or 5 months. And there you are. You have it. Now, of course, it's getting a trifle choppy. And
you might mention the Bongo Weekly for the longer term.
Yes. You see, one of the things that we have here is the Bongo Weekly is one of those indicators that is long, I mean, is late to get in and late to get out. As you can see on that top line there, you can see that red mark came in at least a week later than all the rest of it, right? And notice it was a week later, about that between friends, before it turned red. But when it turns green, that says that there's potential for it to stay green for a fairly lengthy period, as you can see.
Yeah, if you're familiar with Dave Steckler, and I'm sure a lot of you are, he puts a lot of emphasis on the Bongo weekly and daily.
I mean, if you don't mind my advertising so that you can get some more of a flavor for this, you might trot over and take a look at my blog. But I mean, this particular situation right now is a very interesting one, and I don't know if you've noticed it, but it's on my blog. This market is trotting between zeros, 2,600, 2,700, 2,800, and 2,900. And mark my words, where this beast is headed for is 2,900. So off we go. And of course, the pundits are going to say, oh, but it reached a double top, therefore we're going to go down again. Well, we'll see. But right now, as of today, it's all green. Look at it, all green.
Okay, I see the time is disappearing. Let's finish off, Ian, with the Kahuna force and the pocket pivots.
Right. So
and let's just go back to those stock slices, okay? The ones that are crossing over today.
Yeah.
You want to do those?
Yes. Whatever you have is fine.
And let's just go back up to this. Well, this group now.
As you can see, Ron and I work hand in glove. And of course, as you've probably learned by now, his favorite index is, in fact, to use the Force 2 and 13-day moving average. And my favorite one is the Kahuna. And so we joined ourselves at the hip, and we've come up with what we call the Kahuna Force Up. And there you are. These are the ones that, in fact, hit today. And there are 20 of them. So let's take a look at some of these. MBT. Okay. Double click.
Okay, now let's.
Now we've got to change.
I'm going to go to the Kahuna Force.
Force up, right? And there you are. This is the picture. Now, this has been all over the place, but you can very quickly see. If I take my eye to 311, which is in the middle of the chart, you can see there was a strong move there, obviously probably based on earnings report, and off she trotted. Notice we have a Kahuna down at the bottom, and the two force indices are also blue, saying, go for it. And there we are. We trotted from 18 and a half to up to 21. And it's saying, well, today, my heavens, look at that. That dark blue is a Kahuna force index of 0.4. 0.4. In other words, a very, very strong move, as you can see by the candle. But that immediately highlights it as to being one that is on the move. Let's look at a few more.
Okay, we'll do this. Here's Urban Outfitters.
Yeah, you go. Same thing. I don't have to repeat myself. A very rotten-looking chart, but nonetheless, there you go. Next one. Yeah, and this is a more steady kind of beast. And as you can see, the best calls were made back on 215, and of course, it's flown today. Obviously has to do with earnings. If you just click on the earnings piece, Ron, hopefully, no.
I doubt if they're in the database yet.
Not out yet.
Pretty rotten earnings.
Yeah, rotten earnings. So you got to be careful as to what you take. But that very quickly gets you to some of the better stocks that are breaking out, and you make your decisions from there.
One quick thing. You can get more info from the web by right mouse clicking, and if you go to FinViz, that's a good place to get the I don't know why it's not coming up. Should have been up instantly. Oh, there it is. Anyway, earnings come out May 10th before market open. If you look down here and see where the so it wasn't earnings related.
It was today, right?
I'm sorry, that is May 10th. I'm sorry, I lost track of my dates. So it was earnings related, and you can see the gap up here. So FinViz and other places you can get to very quickly just by right mouse clicking and getting more info from the web. Now let's do one more thing. These were all Kahuna force, and we're going to look at the pocket pivots, if there was a pocket pivot also, or if there was a pocket pivot. And you can see that there were 5 stocks which passed the pocket pivot, and I need to change charts here. Now this has the force indexes and the Kahuna and the pocket pivots all in here. Looks like there have been a lot of pocket pivots, and this one isn't really going anywhere yet.
Hey, Ron,
Yes.
can we stop for questions now?
Yeah, we're done. That was the last thing we wanted to show. Sure, go ahead.
Come on up, you got to ask him that mic.
I just wanted to show the high jump individual lines at 1480 hour.
So,
The high jump, you know, then with 14 ATR.
Ron, would you take a brief look at the in more detail at the high jump?
Sure, sure.
what would you like to look
what-
at?
What
On the VIX.
do you want to look at any?
On the VIX.
On the PIX.
On the VIX.
On the VIX.
Okay, it's going to work inversely.
Inversely, yes. The VIX. Yes, you might, that's a favorite of mine. And again, I suggest strongly that you go look at recently what I put up on the VIX relative to the short and long term. As you notice that the VIX has in fact been playing below 18, below the 50-day moving average right there. And that's a sign, a good sign in the sense that the long term for a strong market is in fact below 16 ideally. But certainly anything below the 200-day moving average at 20 it says that the market is still strong. Now, what specifically would you like to know about the high jump and the VIX? This of course works inversely. So of course when the VIX is up strong at 30, the market is being trashed. And by the way, just look at that. What is that spike that we just had? That's easy. That's Japan and our good friends Libya. They both struck on, yeah, there you are, 3 whatever it is, 315 or so.
316.
316. And of course, if you go out a ways, just hit the minus sign, yeah. Now look at this beast. This is flash crash time, all right? So there's flash crash for you. And very quickly, you can tell, look, there you are. There's the picture in terms of high jump. By heavens, and I will offer you one more. Unfortunately, we don't have time to cover it, but if you put an average true range on here, you'll very quickly know that when the VIX has an average true range going from 2 to 3 is the time to get excited that, in fact, this market might be getting hit.
Hey, Ian, can you show that quickly? That's what the actual original question was about.
Oh,
Average true range.
whoa! Now
You can
we're
show
going
that to us.
we're going to put Ron to the test because, and I don't think he's got an average true range, and it's 629. And I'm sorry, I don't know if he can generate that beast. On the high jump indicator, you need to put in one more.
Let's see. Let's see if it's in here.
It's actually in the software. One of the users under the reference group. Is that correct?
Right here.
There you go. Look at that.
Got it.
Of course I've got it.
There you go. Now, didn't I say 3? There you are. Look at it. Once it starts to get above 3, you know it's flying. It's an oscillation. It's in trouble. Does that help? You see, this is very flexible because if you're interested in average true range, normally it sits below 3. Look, there you are. He's just put his cursor on 3. And anything above that says we're in trouble. And that's exactly what I saw. I said, oh, we've got problems here potentially. And then, of course, it fizzled. It really, by the way, it's extremely surprising that you would have all that pain and suffering in Japan and the turmoil that would come after it in terms of the technology area, and you have Libya on top of it, which then has moved to you know, the entire Mideast, and yet, as yet, the market hasn't, in fact, been hit to any degree other than that. Does that help? Chris?
Yes.
Yes, sir.
Okay.
Okay.
This high jump tool is extremely valuable. Hey, it's 6:31 and we always finish on time. I hope you folks enjoy that. How about a hand for Brother Ron?
Well, thank you.
Ron and Ian, thank you very much. We appreciate your time and effort in putting the seminar on for us this evening.
Well, you're welcome, Norm, and thanks to everybody for attending.
We can take another question if you,
Yeah, well,
if you want to stay.
we can answer a few more questions
Yeah.
if you have any.
No.
Who would you consider as your biggest competitor?
The question was, of all the services out there, who do you consider to be the closest competitor to the HGSI?
Oh, I don't have a clue. I mean, this program is the most versatile thing program that I've seen out there because you can do so many different things with it. I can't honestly answer that because I don't look at a lot of software anymore.
Okay. Any other questions?
Well, you know, I'm biting my tongue because this is a true point.
Okay.
Morales.
Yes, let me answer that question. Norm, are you still there?
Yes.
Okay.
Yes.
Here's an example. Gil Morales and Dr. Catcher are using HGSI software now. And Gil Morales in particular, in fact, when we had our seminar in March, he came by for about an hour and a half, and we talked about pocket pivots, and he made the comment that HGS was giving better signals than Wanda was. Now, Wanda is owned by Investors Business Daily. They charge $22,000 a year for that service. And HGS Investor, I believe, if you pay for it annually, is $600. So I guess that should answer a lot of questions. These people, Gil told me, well, Ian was online and George was too. We were having a meeting online, and he said that there's no need for him to build any filters or combos because the stock views in the program are giving him the same stocks that he was getting from Wanda for about $21,400 less per year. So I think that speaks for itself.
Okay. Last question? Yes. I'm sorry, City. The question was, can we identify optionable stocks? And the question is, yes, we can.
Yeah, sure. You can identify optionable stocks. Let me just quickly go to all securities, and I believe it depends on what view you're using. And in this score, let's see if it's in. I've got it in one of these views. Maybe this isn't the one. Let me try this one. But there is a warehouse field for is optionables right here. See this column right here? So yes, it'll pull out the stocks if they're optionable and either say yes or no.
Okay.
Anyway, like Norm mentioned at the beginning of the meeting, if you want to try this software for 45 days, you should download it. There is a lot to learn. There's no question about it, but you can certainly go online. There are some online movies of mine that George has put up there that'll get you started. And just give it a try and experience the power of it.
Okay. All right, Ron, we need to wrap it up. We have to be out of this meeting room. Again,
Okay.
Thank you very much for the time for you and Ian and for George putting it together for us. Okay.
You're welcome, and thanks a lot.
Good night.
Good night.
Good night now.
Yeah.